Hello, everybody. How's it going? All right. I'm wearing a jacket because I'm cold. I still have the same t-shirt on I always do, so don't think I'm trying to dress up for you. Let's get started. I welcome questions and chats like we've done in the past. That was really helpful last time. I'm basically doing this for two reasons. I've changed my view a little bit since Friday, especially my positioning. So I just felt it was important to have full disclosures, even though the whole purpose of these YouTube videos was that I was going to not do full position disclosures every time I trade these stocks. That's what I have the Twitter account for, the locked Twitter account. But I also just had a lot more thoughts after the weekend, as I'm sure all of you have. This thing is so fluid and there's so many moving parts. And as time goes on and all the pieces come together, you have different, depending on the time of day, I have different odds and just a different conclusion. So let me get started here. First thing I want to say is Sheep, who tweeted today that he's 70% on this getting approved next week, has a couple notes that I'm going to attribute to him. And this is why he is more bullish than I guess he was last week. So the first point he wants to make is that no FDA consultant is believing the official, quote, can't travel due to COVID story. But he also doesn't think Bristol Myers is lying to us about that. From a technical point of view, an inspection is unnecessary as QC of vector and final drug product is done in Bothell. Number three, it doesn't make sense that the FDA would travel to Bothell but not to Houston. And number four, the only logical explanation is that they've already decided to waive but don't want to inform the company and leave a paper trail. So that's his views, and I'm going to expand on some of those things with my own views. And let's get started with my views. So first of all, to own this for the next 6 days, you, of course, have to believe that they're going to approve this without inspecting Houston. If you think for some reason they're going to do a virtual inspection or a physical inspection in the next 6 days, and then also get this approved by Monday, it's impossible. So if you don't believe that the FDA can approve this without inspecting, despite telling Bristol that they have to inspect for approval, you shouldn't own this. Now, that's what makes this CVR so difficult to handicap, because you're going against the exact words that the FDA has told Bristol Myers. We're going to talk about that in a little bit. My question is this. Why would, and we've talked, I know sometimes I'm duplicating myself from previous YouTube, so I apologize, but why would they go into Bothell in the middle of October without a plan to get this decided by the November PDUFA date? What would the FDA's incentive be to send in FDA employees to a risk zone? Bothell still had COVID cases. It was much less than Houston. If they didn't have a path forward in Houston. Houston did not change materially from the middle of October to the end of October. Yes, the cases ticked up, but it was already much higher than Bothell. So the only way you can come up with that it's not a health issue for inspectors is that they got pulled for vaccine inspections, which I think is very low considering the fact that the Bothell guys weren't pulled. And there's not many drugs that are competing for lysocell inspections. It would just be the vaccine plans and really no other breakthrough designation, CAR T or gene therapy inspections that need to be done between now and the end of the year. That's the division that does this. If they know that Houston has to be inspected and they can't inspect it, you just delay both of the inspections, Bothell and Houston, until you're ready to do both of them. I can't come up with why they would do this. So then you have to ask yourself, why hasn't the FDA notified Bristol Myers that they don't have to inspect? And this is where I come back to what happened in September when I spoke to Bristol Myers Investor Relations on the phone. He told me over and over again that Bristol Myers is just disclosing the facts to us. Only the facts. The FDA told them they have to inspect both plants, and they did not have either plant scheduled. That's it. He refused, and Bristol Myers refuses to give us any color on any of that stuff. I asked him repeatedly in September, but have they told you that they plan on trying to come in October? Just because you're not scheduled doesn't mean that they don't have a plan. Silence. He would not tell me anything. And they wouldn't tell the street anything in all their disclosures in September. If you fast forward to last week with the earnings conference call and the 10Q, what did they actually tell us? They told us only the facts. That the FDA told them previously that both facilities need to be inspected and that there's no scheduled inspection for Houston. They did not say they expect to miss the PDUFA date. They did not say anywhere in the 10Q or on that earnings conference call that there is even a hint of a CMC issue or an inspection issue with Bothell. I think this is very important because all that Bristol has been doing for the last 3 months has been showering us with risk disclosures so that in case this fails, when they do get sued, they have something to back it up with. It makes no sense to me that 3 weeks after the inspection, when the Form 483s would have been out on Bothell, and they definitely would have an inclination if there was even a hint of a problem from an inspection perspective at Bothell or a CMC issue overall, they would have put that in the 10Q. They certainly wouldn't have said on the conference call, overall, we're, quote, very happy with the way things are progressing. They have no upside because you'll just go back to the language and the lack of disclosure in the 10Q and they'll get sued saying, if you guys knew, on November 5th or November 6th, that you were likely going to get a CRL because of your inspection issues in Bothell or because of larger CMC issues, why on earth would you spend the entire conference call and 10Q just talking about the lack of an inspection happening in Houston when all you were doing was evading the real risk, which is that you were getting a CRL coming up. So I think that's incredibly bullish. And if you look at the actual language of Samit on that conference call, he says that he looks forward, he will let us know as soon as we get the decision. As soon as we get the decision. The decision to me isn't to defer indefinitely a decision. To me, a decision is approval or rejection. And yes, he also hedges it with bringing the drug to market eventually, or he doesn't use the word eventually, but he's far from adamant that we're going to know in 8 days from now. I do find it interesting how on the first part of his answer, he reminds the audience that the PDUFA date is November 16th. Again, I just don't think that's something that they would be telling us if they thought in 8 days or 9 days, we didn't know anything. And that kind of also plays towards Giovanni's line, we're having discussions with the FDA and we'll let you know as soon as we know anything. They almost like they expect imminently an answer here. So why doesn't Bristol Myers know if they're going to waive an inspection or not? I don't think there's any incentive for the FDA to tell them, as Sheep says, to leave a paper trail. But even beyond that, do you really want other pharmaceutical companies to think that you're not going to have to inspect this plant or that plant when it comes to a BLA or an NDA ahead of time? I think that the FDA, as I've been saying for months, is under incredible pressure to approve this, or at least make a decision. I should say make a decision by the PDUFA date. Because it's all about incentives, and I don't see how they can let it slip. Somebody asked me this weekend, the FDA is a very conservative organization, and they were told that safety is more important than anything. So given safety's importance, wouldn't the FDA, being conservative, defer this for as long as they need to? Because there might be something wrong with the plant, and if there's something wrong with the plant, then they look really bad one day. So my answer to that is twofold. First of all, this is a very niche product for very, very sick people. This is not, a cholesterol drug that is going to be given to millions of people. And without a plant inspection, if it ends up being that it kills millions of people, the FDA will never recover. It's vastly more likely that the inspection doesn't yield any gross problems, and the FDA isn't going to have egg on its face 6 months or a year from now because they waive this inspection. Remember, they inspected Bothell, which is where it's actually made. They just haven't inspected where the vector is. So that's my first point. My second point is This drug is superior from a clinical perspective to other drugs on the market. So by delaying it, you are in effect making patients who are very sick choose between two current CAR Ts with a worse clinical profile and in effect killing people. I hate to be so dramatic, but there's a 2% chance from a side effect perspective if you take the existing CAR T that you have a side effect that will kill you. The FDA is well aware of the clinical profile here. And from a clinical profile perspective, that part of the review is over. So yes, the FDA is a conservative organization, but this isn't the same thing as rushing some mass market drug without dotting the I's and crossing the T's. Let me see what else I got here from Bristol. And I have some questions here. Do you think the Lonza facility in Houston being approved without inspection for COVID vaccine significantly raised the chances for lifestyle approval without inspection? Or is CAR T more dangerous? I think you might be confused. The Lonza facility in Houston is not the one that is making the COVID vaccine. I believe that's in another state. And yes, I think that's apples and oranges between the COVID vaccine and the CAR T. But that brings up a great point. A vaccine, they can't cut corners on. This is not, forget about this being given to very sick people. Vaccines being given to hundreds of millions of people. So there's no cutting corners in the vaccine. I think I read somewhere that they can approve that from emergency authorization usage without a inspection. But the checks that we have been doing on the vaccine, because we were doing that too in conjunction with this, is that they have been inspecting and analyzing vaccine manufacturing data for months, mostly virtual, to make sure that the vaccines are being made at the same consistency level over and over. So, let me answer that question as far as the vaccine inspection risk. So now, are we worried that COVID people are going to be pulled, or excuse me, FDA people are going to be pulled for COVID vaccine inspections? I'm not, because I told you I'm not banking on this Houston facility getting inspected anytime soon. If it hasn't been inspected yet, it's not being inspected in the next 6 days. There is a decent chance, or not a non-zero chance, that come Monday, if we do get a delay, that Bristol Myers gives us more color on what the FDA plans on doing. Now, Bristol Myers has tried to be not very transparent when it comes to color. They just like to tell us the facts. So unless the FDA actually says we plan on wrapping this review up in the quote, coming weeks, I don't expect Bristol Myers to ever put something like that in a press release. I would expect the least amount of disclosure, just that the FDA has informed us that they can't complete this review due to Houston inspection, and they hope to, we're going to work with the FDA and hope to complete it in the future. I'm not banking on better language than that if we don't get the approval by Monday. What else do we have here? Is there any insider movement, volume, and price hint on the outcome? No. I think this thing just trades wild, and insiders don't trade at all. So, no, I would not bank on the movement of the CVR at all to mean anything at any time. Kill, is that another doll behind you? Still creepy. They hide everywhere. That is so funny. That is indeed my daughter's fake baby. And she brought it in an hour ago. All right, I'm going to go to Groupon, and I can come back to Bristol Myers. There's no reason for me to do an hour on this thing. I'm sorry, I didn't do my disclosure. So I have not sold any stock, and I bought a little bit more, very little. So less than 5% more I bought. But I just want to be clear that I did not sell any net position from this blow up. It's now a much smaller position, of course, because it's gone down 65%. So my it's much smaller than it was a week ago, but the number of shares I own is like about 5% more than before all this happened. And I'm definitely expecting it to go to zero in a much higher than a non-zero chance in the near future. I would say my odds right now are still 25 to 50% approved on time, probably closer to 50%. So 40 to 50% approved on time, which is so hard to say and actually articulate out loud because it seems crazy, right? Why would this come true when you have the FDA saying they have to inspect and they haven't inspected. I will remind everybody that we know of 5 other pharmaceutical companies that got letters like this, and they all resolved it, either through virtual inspections or waiving inspections. I don't know the names of any of them. It was all through a consultant who, told us anonymously what they were. So there's history and precedence with this. So I'm at 40 to 50% approved. I'm at less than 20% chance CRL, probably less than 10% chance, because I just do not see how they could not have disclosed any issues on that conference call. And very happy, sure looks like a huge mistake to say if you're about to get a CRL in 10 days. Again, he's got no upside. No upside, just loses all credibility, and there's no reason for him to do that. And then the balance, so 50% that they defer. And if they defer at the 50%, I'm not too positive. I'm not saying I'm going to sell, but I'm not too positive that somehow they resolve it in 5 or 6 weeks. It's a good question. Why wait until Monday to approve? Well, there's a chance that they had Form 483s, and the Form 483s were just responded to. So you have to, resolve those before you can approve this. It's all obviously coming down to the last moment. I used to think that the next 5 days or the next 6 days are only risky, right? You're only going to get a rejection, or you're going to get, usually you don't CRL early. It's pretty rare to get an early CRL. But I thought you could only get a rejection, or you could get a press release from an 8K from Bristol Myers saying they expect a rejection, or an 8K from Bristol Myers saying the FDA has informed them that they will not be able to inspect and they will not approve on time. In fact, given how high profile this is now, and again, the FDA does not care at all, 0% about the CVR, but I'm sure they're aware, and Bristol Myers is made aware how this is a high profile important drug. It's possible the FDA would notify Bristol Myers ahead of time that they plan on missing the PDUFA. I always thought they'd notify them weeks ahead of time, but that wasn't the case for SPPI a few weeks ago, though. A friend of mine told me we shouldn't really believe what they say, that they might have known weeks in advance, SPPI, that they were going to miss the PDUFA. So I used to think the next 6 days can only be downside. I now think you could get an early approval. You can get approval in the next few days. That seems crazy to me, that we would get an approval in the next 2 days, when just last Thursday, they put out an 8K, a 10Q and a press release that scared the living crap out of everybody. I mean, if they really thought they were getting approved in like the next 48 hours, are they really going to highlight that risk? But again, I don't think Bristol Myers knows for sure what's going to happen. I think it's complicated. I keep getting message retracted from people who are sending. This is weird. I don't know why 4 people in a row send something and says message retracted, unless you guys are like saying anti-Semitic stuff and Google's picking it up or something. Anyway, so keep asking questions and hopefully they start working. Yeah, it worked. It worked for Gil. Okay. Let's see. Okay, I'm going to go to Groupon and we'll go back to Bristol Myers. So Groupon, I think, is just incredibly interesting. I talked about it in a previous video, so there'll be some duplicates here, but I look at this as unbelievably asymmetric, okay? You have a $750 million market cap with no net debt. I don't think there's really any net cash because it's a kind of funky balance sheet with payables and stuff like that. And they are currently breaking even in the middle of COVID. So there's no cash burn right now. And, revenues are down 30, 40% year over year. So you have to break Groupon down into 2 buckets. The first bucket, and if you're going to hang up, by the way, because you think you're only here for Bristol Myers, you should stay, because I'm going to go back to that if I have any other questions. And also, you want to own Groupon, so I wouldn't just hang up just because I'm going to Groupon. Anyway, they have 2 divisions, goods and local, and they break out the differences of revenue with both those divisions. Goods is obviously what it is. They sell crap. And local is what it is. They sell services for crap. So their core business is local. It's not goods. And they were going to exit goods in February under the previous CEO, but they reversed course when COVID hit and the new interim CEO came in March. And they're transitioning goods to 3P, so they don't actually hold any of the inventory. It's all just done through third parties. So they basically sell the stuff on the website, someone else fulfills it, it's pure gross profit, and it's a great business. The problem is that in the meantime, when you transition, your revenues plummet because it all goes from booking net revenues from gross revenues. And this is going to happen all through, they should be done transitioning by the end of this year, but this is going to be happening all through 2021, where they have bad revenue comps from a goods perspective, but the gross profit won't be affected at all. In fact, it might even improve, assuming they do a good job with promoting it and they get 3P to work. But this is the thing, goods is irrelevant. Okay, the story is local. It's always been a local story. And this is just confusing the stock. So the stock went from the low 30s to the low 20s, even the high teens, first based on this goods revenue disclosure warning. This is all behind us now because they just reported. But that's why it went down from September on. And then it also went down because of COVID, obviously, because of the reopening trade failed and people were worried about COVID resurgence. It goes without saying that today's kind of a game changer with the vaccine, okay? 90% effectiveness is unbelievable. And most people would be comfortable with going back to their daily lives if they knew that their loved ones, their senior citizens, whatever, were 90% inoculated against this. I know I definitely would be fine with going back to my normal life. I think that's probably likely by the summer of next year. If you look at comps for Groupon with what they did this year, which has been atrocious, and the fact that they took out $200 million of cost this year out of SG&A and marketing under this new interim CEO, so that if they just got back to 90% of gross profit pre-COVID, they would be doing $300 million in EBITDA on a $750 million market cap. Let me repeat that. If they got back to this 90% of their pre-COVID business, they would be doing $300 million of EBITDA on a $750 million market cap, okay? And it would be growing and probably trade at a 15 to 20 times EBITDA multiple, which would put you at, a $5 billion market cap versus $750 million today, okay? The most interesting thing to me is this new CEO is trying to finally change this business model so where you don't just show up and try to buy 50% off the shitty restaurant down the street, but that good businesses are incentivized to be part of this portal where the discounts are much smaller, but you have recurring business because people go to this portal to go as a locals portal, and you could try new things out. You could do repeat business. In the past, it was not incentivized. If I tried this new Greek restaurant down the street and I got, $5 off a $20, meal, you weren't allowed to buy the coupon again. And I might not even go back to that restaurant because, it was a good value, 50% off, but maybe I just don't even think about it, or it wasn't a good value for full price. So what if I can go back through my Groupon portal and get 15% off or 10% off every time I go there? Yes, there's a lot of risk for the restaurant there. People would only want to go through the Groupon portal to keep getting that 10% off. And I'm sure there's quirks they have to work out to make sure that people don't cannibalize their business by giving perpetual discounts to repeat customers. But it definitely seems like a better business model to me, having a loyal group of people that can be fed into a local ecosystem than just getting the cheapest individuals that only want 50% off one time and never come back. That's always been the problem with Groupon. I have a funny Groupon story, actually. About 12 years ago, I went to a dentist for the first time in a few years. And yes, that's pretty disgusting, but I probably waited 3 years in between dentist appointments. This was at least 12 years ago. And this is before we all knew exactly what Groupon was and that you shouldn't be using Groupon for dentists. And the Groupon dentist was like $100. And I went in to see this guy and I lay down and he's youngish and he starts talking to me about like Las Vegas, and he's just kind of like, it's very sleazy. And I told him I was going to Las Vegas soon, and he checks my teeth. And then he waves a wand over each tooth, and often they're making beeps as he's waving this wand, this electric meter. And we finished the checkup. I didn't say anything, and the Groupon was like $100. And if I wanted my X-rays, I also got X-rays. He never checked the X-rays, never showed them to me. And he finishes up the checkup, and he brings out a piece of paper, and he goes, "This is what I recommend we do." He goes, "You have 22 cavities. And the cavities are $100 a piece, and you also need your teeth whitened." And I looked at him. I've only had a half a cavity once my whole life up to that point. It was like a very minor cavity when I was a kid. 22 cavities, he told me. I said, "Yeah, I think I'm going to pass on having 22 teeth filled. Can I have my X-rays?" And he said it was like $20 for me to have my X-rays. My point is, it's not exactly a very high quality portal for you to be doing things like, maybe getting like a lobotomy or dentist or whatever, anything that you have that's a very high touch, high skilled need. But maybe it would be a little bit better if they transform the portal into much less of a discount, but much more of a I don't know, even some form of kind of like Angie's List, where you go to see a breadth of locals options for what for something that you're in need for that day. Anyway, that's my Groupon story. But this is why I'm going to go through the rest of the reasons why I'm very bullish with Groupon. There's much more to this. So there was an activist in Groupon, and he joined the board in January. Sorry, he joined as a board advisory in January, the end of January. Okay, he owned 5% of the company. He disclosed in April he was leaving the board because he was very happy with the progress that was made. By then, they fired the CEO, they fired the COO, they put in this new interim CEO. And he also disclosed, the activist, that he purchased more stock in February and March, and he was leaving the board, okay? I thought that was odd. The only reason why you would do that is if you didn't want to be restricted, right? Why else wouldn't you want the board observership? He could have stayed all the way through the end of the year. It was his option, okay? But this is where it gets really interesting. On Friday, and then in April, Groupon put in a poison pill. And poison pills, for those of you who don't know, are trying to dissuade people from acquiring a lot of stock in a company without acquiring the whole company. It just makes it harder for someone to go hostile or activist on a company by buying up 10% position and then pressing for change, or even making a tender offer or a bid for the company. Well, on Friday, and you could pull this up, on Friday, they issued an 8K with no disclosure other than this. It was just kind of like a hidden 8K that said they were deleting 2 paragraphs from their poison pill document. And the 2 paragraphs they were deleting had to do with people acting in concert when working together when it comes to trying to develop a strategy or a bid for the company. And I find that very peculiar that they deleted those paragraphs. It could be very innocent. It could be that this activist was worried that they weren't able to even have a conversation with other shareholders based on this paragraph, and they didn't want to trigger the poison pill by even talking to other shareholders. So they asked the company, can you please delete this? Or it could be something more. It could be that a few shareholders might be working together, to try to come up with a plan to take this private. I don't know what the answer is, but they definitely deleted that language for a reason. And it wasn't because the language is in there accidentally. Why is there still an interim CEO? They put this guy in place in end of March. We're now sitting here in November. I think he's awesome. And I have a hard time believing that the board also isn't highly impressed with the strategy he's laid out and with the execution he's done thus far. So I have a hard time believing they're still in the middle of some CEO search process, 7.5 months into this, and they wouldn't just make this guy permanent CEO. Why haven't they? Again, that makes me think that my hunch on Friday's 8K is more than just a hunch, and that they are looking at strategic alternatives. And they have been looking at strategic alternatives for years. Groupon's been rumored to be for sale for years. The difference now versus before is it's a 750 million market cap enterprise value. Okay. Back in September of last year, when they were looking at acquiring or merging with Yelp, they were a $1.8 billion market cap, I believe. It was a $3 stock, a $60 pre-split stock. Right now, it's $25. It's a whole different ballgame, and it's a much easier proposition for either an LBO to happen and then fix it behind closed doors and get that 20 times $300 million EBITDA valuation just 2 years from now, or merge it with a Yelp or merge it with a Interactive Corp or whatever and have them fix it. I think there are so many opportunities to win here, whether they turn it around publicly or they hit a bid and they take it private to do this privately. There's no cash flow burn right now, and most of local is closed. So even if the execution is, not optimal over the next 2 years, it's hard not to imagine you at least get back to 75 or 80% of gross profit that you had pre-COVID, which would still generate 150 million of EBITDA on a $750 million market cap. And again, this is high quality EBITDA. They don't even sell goods anymore. It would all be kind of third party. So I think it's kind of like a heads you win, tails you win kind of thing. And the craziest thing about Groupon is the implied vol in this stock. I mean, we're talking about a straddle for January 22 that's $19 for a $25 stock, an 85% implied vol. You only see things like that on binary biotechs, not on no net debt internet retailers that are break even and have a huge amount of upside based on if you can manage to execute versus not much downside if you can't execute and you just end up selling the company. So I just don't see that very often. What are your risks here? Your risks are that the chairman owns 13% of the company and he's stubborn and he's probably passed on offers for the company over the last 5 years that are much higher than this. And he won't sell, let's say, for $35 or $40 a share. Absolutely a risk. He's so stubborn. He holds on to this thing and he runs it into the ground. Okay. I think that's unlikely, but that's a risk. Your other risk is, of course, the turnover fails. And instead of 200 to 300 or 400 million EBITDA, you have 0 to 100 million. I think the risk of negative EBITDA is extremely low. Finally, they have to do something. If you look at the stock-based comp of the previous year, 2019, I only looked at the previous 9 months because I just pulled up the queue right before I did this YouTube. They did 62 million in stock-based comp in the 9 months ending September 30th, 2019. They did 30 million in the 9 months ending this year. And that's probably because the stock went down so much. So from an accounting perspective, they book it as less. There's only a 750 million market cap. So you can't be issuing 80, 90 million a year in stock-based comp on a 750 million market cap. That's 10% annual dilution. It's not sustainable. They know it's not sustainable. I'm sure the chairman who has 13% of the company doesn't want to be diluted like that. So you either have to get the stock up big so that the stock-based comp is a much smaller percent of the overall, or you have to sell the company. You don't have any other option really. So it's not going to stay here. And this stock could not be more hated. JP Morgan came out with a note today reiterating their sell rating and saying that their price target is 1.5 times 2022 EBITDA. And they're too low on the 2022 EBITDA. I think they have like $150 million 2022 EBITDA. So, you know, how he could possibly put a note out with a 1.5 EV EBITDA multiple, I mean, it's disgraceful. He probably should just say, we think this is a 0 and we're not even going to put a price target on it. I think that's pretty much my whole thing with Groupon. Heads you in, tails you in, and I think it works. And as far as timing goes, I think that the 3P revenue transition is confusing, but they did a great job explaining it on the call. So I think that Q4 expectations are now pretty low, and you already have the whole sell side hating except like one guy. And now with this vaccine news, can you think of any company really that can benefit as well as Groupon does? All they do is sell to local businesses that are affected by COVID. Massage parlors, Kid Dynamite blog could tell you a lot about massage parlors, by the way. He goes to them all the time, a whole large number of massage parlors, and he'd be happy to share his due diligence on those. But he uses Groupons for those too. And you have amusement parks, you have every form of local business, of course, restaurants that has been harmed by COVID, you know, laser tag, the list goes on and on and on. And some guy I follow on Twitter made a great point. You're going to have a resurgence of new businesses pop up starting in 2022 and beyond. And Groupon is best for new businesses, people that don't have an established customer base and they need to gain traction. And this is where they would go. They would go towards trying to get new customers in the door by offering discounts. And I think you're going to see a huge number of new restaurants opening and a huge number of things like that. So the growth curve could be huge. Did I say huge? I think that's it. I think there's no more questions. Any other questions or it's broken. Anyway, pleasure doing business with everybody. Great seeing everybody. And I'm sure I'll be speaking to you again this week as we learn more on Bmyrt. Take care.